how are you? So this is part B of the bank reconciliation. So we talked about the overview in the previous video. If you didn't watch that one, please, I would suggest you first start there, then listen to this one. So remember to like, subscribe, comment, do your thing, so that we can keep on doing this thing and continuing and continuing. So there's something that you have to understand. When you are now merging the books of the business and the books of the bank, there are bound to be errors. There are bound to be errors, there are bound to be things that are undetected. So on the business side, we only need the bank statement to update the bank charges. So we can't estimate. I know it's now easier with certain account types and stuff, but on overall basis, we'll be working on that assumption that we can't estimate how much bank charges we've incurred unless we have the physical bank. What is this? The physical bank statement. Because remember, the goal at the end of the day of bank reconciliation is that the bank account as per the business and the bank account as per the bank matches, becomes the same thing. So if there's things like bank charges, they have to be corrected on the bank in our ledger because we didn't have them. There are errors that you're going to see as you do your questions. You're gonna come across errors where it happens in the questions, but in real life sometimes, yeah, and there it happens, sometimes it doesn't. Say you own ABC company and someone made an error, then then the bank erroneously credited your bank with a check that was supposed to be for maybe BCD, not ABC. You see, mistakes are bound to happen. So those mistakes which are done by the bank, they are corrected on the bank reconciliation. The mistakes which are done by the bank are corrected on the bank reconciliation. So if you were erroneously credited, you go on your bank reconciliation and put the entry as a debit. Everything is going to make sense because I'm sure on the third video we're going to draw a skeleton so I can show you which side I mean when I mean debited on the third video. So for now, just understand, if the bank erroneously credits you with money that wasn't supposed to be in your account, what it does is it's going to increase the account, right? So how are you going to deal with that increase? You just have to minus it from the debit side of your bank reconciliation. So mistakes that are done by the bank are corrected on the bank reconciliation. Then when it comes to our books now, say you issue a check and the check that you issued, you put in wrong details. You see, the details, that check, you don't have to put it on the bank reconciliation, you just correct it within the books, okay? The checks which go onto the bank reconciliations are checks which are not yet presented for payment. What this means is you issue a check to someone, then the person that you issued the check to, say they travel, they go to Ethiopia, they go to Kenya or where they do for months, and they haven't presented that check for payment. In your books, you already show that this check was put in the cash payment journal is a payment made, but the bank is still saying we are still waiting for that check to arrive. So what then happens is that check, until it's submitted to the bank, you keep on putting it into the bank reconciliation. And remember what we said about the debit and credit. It means that check is going to be on the debit side. It is going to be called an outstanding check. It hasn't yet been presented for payment. That's what's called an outstanding check. Then there are those checks which are called stale. Okay, what a stale check simply means is the check has gone beyond 6 months. And if the check has now gone beyond 6 months, it is deemed a stale check. And if it's stale, it has to be corrected in the business books, because what it simply means is the check was never presented for payment. And because the check was not presented for payment, in our books, we still have on the CPJ a transaction about a check. But in the bank, the transaction never went through. So basically means we now have to correct, and the correction will now be writing the same check on the CRJ. Remember, you made the payment and you recorded it on the CPJ. You're now just cancelling, and the cancellation is you basically going on the CRJ. You're now treating it as if you are receiving the check yourself and recording it in your cash receipts journal. Okay, so that one, it cancels it. So basically you just have to be wary. If you are given checks, sometimes they will tell you in the scenario that this check is now stale and a new check has to be issued. So meaning you now have to first cancel that check, and cancelling the check is as if you are now receiving it yourself, which means you have to record that check on the cash receipt side, then issue a new check with a new check number on the cash payment side. Then what else? That's basically it about the checks, outstanding checks and stale checks. Errors done by the bank, they are corrected on the bank reconciliation, and I think that is it for part 2. So just be wary, errors done by the bank and how to treat your checks. Make sure you note the dates, 6 months and above, more than 6 months actually. If the check is more than 6 months old, the check is stale, you have to cancel it. Sometimes they will tell you that this check is stale, sometimes they will not tell you that this check is stale. You just have to count. They usually say check number 1, 2, 3, and you have to count it. So thank you so much.